Hi everyone, let's go through my preferred and alternative Elliott Wave scenarios on Bitcoin. Starting with this look at the impulse, where currently we find a little bit of resistance at this 1 hour order block, as well as after filling this gap over here. And we also have the 4.236 extension target pulled from the low of 1 to the high of 1 to then the low of wave 2, which is a very valid wave 3 target as well. Now, in my opinion, this wave is not yet finished, as volume is increasing with this move to the upside, which is very bullish, because eventually you don't really know when a wave 3 is going to end. You only know when a wave 3 is finished once price is going to start to range, and after price is going to make a bit of a range, eventually you expect another wave 5 to the upside, where the volume of this wave 5 will be lower compared to wave 3. So that is something to look out for. The moment we do not yet have a range and then go up on lower volume is also the moment that we can still expect higher prices to come. Now, we also have some news this week, which I do like to highlight shortly, because tomorrow at 2:30 p.m. on Thursday, which is Central East European time, so make sure to check your own time zone, we have some high impact news, the red flag over here, as well as on Friday, we have a couple of things going on, like the red flags, high impact news as well. Now, I have no idea what the news is. I don't follow news at all. I only know news equals volatility, and that is something I do care about. So make sure that around those news hours, you trade safely. If we then zoom out and we have a look at the more bearish scenario, this is becoming less and less likely the higher price is going to push, because this is a 5-wave structure to the downside. And because this is a 5-wave structure to the downside, in a bearish scenario where this is potentially a wave A, B, C, or a wave 1, 2, and then eventually a 3 for much lower prices, you do not want to see price taking this high. In the bearish scenario, it's basically the bearish scenario is invalidated the moment price is going to take the high here at about 31k. But what is also something to take into account is that wave A, because this has to be a 3-wave structure, a corrective structure of a 5-wave impulsive move to the downside, has to be a 3-wave move. That also means that this is a zigzag, because this is then an impulsive 5-wave structure, followed then by a 3-wave structure, and then another 5-wave structure to the upside. But this wave A went so high already. We passed the golden pocket. We're knocking on the door of the 786 as well. And the higher this wave A goes, the lower wave B has to go in order for wave C not to take the high to invalidate the whole bearish scenario at 31k. So what you see on the chart right now with the lines as well is that the 1-to-1 that you see in the chart is basically from the low of this wave 5 to the high that we currently have, to then the low over here of the 886. And then you can see that the target for wave C, which is usually the 1-to-1 of wave A, because wave A and wave C tend to have a 1-to-1 relationship in length as well as time, by the way. But the 1-to-1 is already very, very close to the 886, which then is also very close to the high over here. The moment price is continuing to push in this first structure, so this wave A, you can see that this 1-to-1 is going to go up, 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 up as well. So the higher wave A goes, the deeper wave A has to wave B has to retrace in order for wave C to still be valid. Now, as I've just mentioned, I still expect more upside for this structure over here, which therefore makes this bearish scenario unlikely and therefore an alternative scenario, and at the moment not my preferred scenario. If we then look at my preferred scenario at the moment from the bullish, between the bullish and the bearish scenario, I'm looking for a wave 5 to the upside in the structure that you see over here. So what we're looking for is this to be a wave 1 from the 15.4k lows, then a wave 2, 3, 4, and then eventually a wave 5 to the upside, where currently wave 3 is shorter than the length of wave 1. Now, that is not necessarily a problem, but it does mean that wave 5 is not allowed to be longer than wave 3, because wave 3 has to not be or can't be the shortest wave in an impulsive structure. So the maximum target for this wave 5 is the 1-to-1 over here, which currently sits at 40.2k. So the moment price is going to push up all the way and hits this target, this scenario for a wave 5 is invalidated, and it is more likely this is a 1-2-1-2 for then a bigger 3 to the upside and much higher prices to come. Now, if we look into this scenario and we look at wave 3 and wave 4 at basically what has happened, we look at wave 3 with an extended wave 1 over here, which therefore means the targets for wave 2, 3, 4, and 5 change, but all these targets have been hit, all the most common targets I should say have been hit, so this is a very valid structure over here. Follow then by an expanding flat in a wave 4. So this is then the high of 3. We then have a 3 wave A, 3 wave B, and then a 5 wave impulsive move in a wave C, where usually, or actually in an expanding flat, wave C should end below wave A, which has happened. We wicked below wave A in the most common target area for a wave C as well, so that is actually quite nice. Now, the only thing is that this wave B is not the nicest. First of all, it reached a rare target for a wave B, and on the daily time frame, no candles closed above the 1.618, so that's at least good to see. But also the 3-wave structure of this wave B is a little bit odd, because this ABC expanding flat move is a 3-3-5 wave structure, where we can clearly see a 3 waves in A, but then this has to be some sort of a 3 wave in B as well, where this second part of the 3-wave structure in this wave B is very extended, which is more rare. It's definitely not common. Also, considering the targets of potentially a zigzag over here, this structure is very much extended. However, as it stands now, this could definitely be the low of an ABC structure, which then is the low of wave 4, from continuation to the upside in a wave 5. And if you look at the volume on the 4-hour time frame, you can also see that as price goes to the upside, volume is increasing, and as I've just mentioned, eventually you want to see a little bit of a range for a wave 4, and then you can expect another move to the upside, at least taking the highs of wave 3 on lower volume. So basically, the higher price is going to push right now, the higher wave 5 will eventually go, right? Because we expect a wave 3, eventually a wave 4, and then another move up for at least a wave 5. And I do think that for this wave 5 over here, for potentially this scenario I have on the charts right now, an interesting target is the 2022 range highs. That is, if I zoom out a little bit, the highs of this range over here, where also you have this little high just a little bit higher at about 32.6k. So that is quite an interesting target for now, at least as a starter, to wait and see what price is going to do, if it is going to reach this target, because of course we do not know what price is going to do. We can only trade price based on our personal trading strategy, our analysis, our trading plan, and that is also something I can definitely recommend for you to build your trading plan, build your strategy, and make sure you become a consistent, profitable trader. So that being said, I hope this video was helpful or valuable to you. Please check out the macro and the high time frame video if you're interested. And for now, thanks for watching and subscribing, and I'll see you at the next one. Bye bye.